Well, hello, Mavericks. Welcome to the US Payrolls Report. Boy, that says August 2nd. It is September 2nd. That is not correct. So here we are, but this is the August Payrolls Report. And we are about 12 minutes away from it. And so let's go through just the expectations. Not that this really matters, but it really will get us in the right frame of mind to really find out, okay, where do we want to play this? What are we looking for? We're looking for another strong jobs report. The expectations are 318,000, as you can see down here. I've seen anywhere from 300,000 to 320,000 as far as estimates, and unemployment rate holding steady, wages holding fairly steady. So this is definitely a more mellow estimate than what we saw. Actually, this is about the same estimate as what we saw last month. But remember, last month, the estimates were about 300,000. It came in at 500,000 jobs. And that really caused the market to start to be under some pressure because it meant there was going to be a more aggressive Fed. Before we just jump into some trades, let's go through quickly the three ways that you can trade news: entering before, entering on the news, and entering after the news. The biggest risk around news announcements is slippage. Slippage means that you put in orders and they don't get filled. Either they don't get filled at all or they don't get filled where you want to get filled. And so this is where, again, we want to make sure that we are using stop limit orders. Stop limit saying, okay, we want to get in. And again, we want to get in, but at a certain price. The biggest risk of entering before news announcements is slippage. So if you were to get in short on this, again, pound Aussie here, let's say you put in your stop at 183.10. If it moves so fast, you're not going to get stopped out for a while. We also have a risk of whipsaw. Whipsaw is where you get a big candle in that first 1 or 2 minutes. And you can see that if you're long, you got stopped out. If you went short, you got stopped out. So again, trading news here, the biggest risk here is the big volatility that happens on these news. Sometimes I go into announcements and I'm thinking, hey, this is going to be really big whipsaw potential, big moves. And so I'm always very cautious in those because I know that that can lead to some big slippage. This report, I think it's definitely an elevated risk, but I've definitely come into news announcements thinking there's going to be much bigger whipsaw action. I think this one's going to be a fairly mellow one. But that being said, that's just my opinion. I don't know what's going to happen. No one knows what's going to happen. So let's go in and build a trade here. Let's go in and see, okay, what exactly it is we want to be looking for. All right, I just wrapped up a short pound dollar trade. So nice little trade, made about just over 100 pips on it. I'm not super excited to just jump right back in a dollar trade. Just like I said, I'm always very conscious of when you get out of a trade, you've got a lot of baggage that you're bringing into the next one. So like I said, you want to make sure that you're very cautious as far as psychology, what you're bringing into it. I just got out of a dollar trade, like literally late last night. So am I being reactive jumping back in a dollar trade? Am I saying, oh, I want to trade dollar again because it's so great. It was so great the first time. And so again, this is just psychology. We want to make sure we don't take in our baggage to our next trades. That being said, I trade dollar pretty much every single first Friday of the month. I don't feel like this is a reactive trade, but the dollar did have a lot of energy this week. And you can see after basing for all of last week, we got a really nice upward move in the dollar. Let me just pull up the dollar basket. I'm going to pull this up on a daily chart. And you can see we got a really big run of energy. And so the big question is always, is there going to be an extension or is there going to be a retracement? Is this move going to keep going or is this move going to retrace? And you can see we're up here at a little bit of resistance levels. We've had a nice run. So going into this, I'm looking at this saying, okay, where is the biggest likely move to happen? And I've got to say that I'm actually more leaning towards dollar short than dollar long here because the dollar just had a nice expansion of energy. I could easily see us in for just some pulling back. Like I said, I just got out of a dollar trade. I'm not super pumped to just jump right back into dollar trade, but we are here and let's put out some trades just to see, if we can catch them. Let's take a look at relative strength here. And I'm going to go through this a little bit quicker than normal because we are running a little short on time. But the strongest currency right now is the euro. The euro basket is up 0.42%. So if I'm looking to be short dollar, then I want to choose the strongest currency to be short against. And that here is the euro. So the euro has been going steadily down, 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 down. This is a daily chart, and you can see we're getting a lot of support down here below the parity level. And right now we're basically right at parity at 99.93. So I'm going to go into this 4-hour chart, and you can see that on a 4-hour chart, it is just in this range from 99 up to about 1.005. That's about the biggest range we can expect here to move. Until it breaks out of this range, we can't play it because we just don't know where it's going. Here's what I do like here. We've got this big release of energy. Now we've got this long base here. So the question is, how do we play this? A very conservative way would be to just simply wait for 99 to break, get short at 99, and there's your trade. The problem is this is a Friday. That will definitely be a next week's trade. So the question is, does this thing have enough juice to move on up to the top of this range at 160? So we've got about 65 pips that is possible to get. But that is right on the edge of what I even like to go for as far as a trade. Like I don't love this trade, and I don't make trades just for the sake of making trades. But this is the only trade that I would make here. Would be a long euro dollar, and I would have to set it up to trigger. Again, I wouldn't just get in it here. I'd say, hey, prove it to me first. I would really be looking at 1.002 as my entry point. The problem is my target is 1.006. For me, that is not enough meat on the bone. I don't go for 40 pips. It's just not my trading style. So for any of you that do have a trading style, okay, shoot for it. But this is just not my trading style. So here it is. I'm in a little bit of a box here. I think the dollar's had a nice run for the week, spent a lot of energy, and is more likely to be tired than to have more energy after this. The problem is the only trade I want to take a look at, euro, I'm in a base here. The second strongest currency was Aussie. And you can see here, if we go here to let's go to a 4-hour chart on Aussie. We just broke down off of this base here. You can see it's just, we'd be buying a bounce here, and I just don't love that trade. It's just not the kind of trade that I do. I do not just buy a counter trend trade to try to get, here we are, 68.20. Maybe it goes up to 68.60. Again, this is 40 pips, but this is on a 68 cents currency. So this one definitely has more percent gain in it. This is like maybe within my range of what I'd like to do, but for me, it just doesn't fit. There isn't a big enough movement up. It's a counter trend trade. I just don't do these kind of trades. So here we all are early in the morning, sitting here looking at this, and I'm going through this. And again, this is for me. For me, I am just not interested. The trade that has been really good lately is dollar yen, and I've got a couple traders saying, hey, Rob, what about dollar yen? I do think dollar yen looks really nice here on a chart. It looks like it has, we just broke out of this base here over about 3 days. We've spent some energy, but as far as right here, right now, this thing looking like it's showing the most amount of strength here. So if someone said, Rob, I want to do dollar yen long. Question is, boy, we're breaking out to new highs for the year. So yeah, dollar yen is definitely a possible trade. And I also have requests about dollar CAD. This same thing. Dollar CAD is counter trend. We just broke out to some new highs. Sure, it could pull back to 130.75. This one's got 75 pips, but again, it's on a $1.30 currency. That's to me, there's just not enough profit potential for me to justify the risk of trading these news announcements. The risk of slippage, risk everything else like this. So to me, if you're going to make a trade here, long dollar, it is definitely dollar yen. If you're going to make a trade short here, it's euro dollar. And look, I know we all came here early and all showed up, and sometimes it's just not there. At least, again, this is for me. And I don't make trades for the sake of just clicking a button. It's something I used to do as a young trader. But now, after 25 years of doing this, when I show up and it just isn't right, I can't build the correct trade, then I just don't trade. So I'm going to be a spectator, and sorry about that. That's just where the market is right now, at least for me. But like I said, if anyone said, hey, I'm going to make a trade here, short dollar, long euro dollar, long dollar, dollar yen, looks like the best trades to me. Dollar Swiss franc, I was looking at this earlier. Swiss franc has been weak. This is also breaking out to the upside, but to me, they're not really enough here. Okay, so we should have the numbers out. Let's check out the numbers. Okay, so numbers came in literally as expected, 315,000 jobs. The unemployment rate ticked up 2 percentage points unexpectedly to 3.7%. So that's actually going to be a little bit, meaning that the jobs report wasn't really, the jobs created was strong, but the unemployment report was a little bit lower. Let's check in on equities. My guess is that's giving a little bit of a boost to equities. And sure enough, yeah, we're getting a boost out of equities here. So equities are liking that number. So that's probably more weak dollar than short dollar. So weak dollar, that would have been euro dollar. You can see if we had an order out there at 110.20, we would be triggered at this point, looking to move up to that 1.006, which I thought was the most optimistic you could be on the target. So the number comes in basically as expected. That is kind of the worst thing to happen when you're looking to trade a news report, because I believe in efficient market theory. The market was priced in the correct way to reflect those expectations. So when the market comes out and meets those expectations, then the market is already fairly priced. So there really shouldn't be much movement here off of this. So this is one of those, again, out of the 12 reports we get of payrolls for the US every single year, I'd say 7 or 8 are good, 4 or 5 are duds. And this one is looking right now like a dud, and like it's really not all that great. My expectation is this is going to be better for the stock market than it is for the currency market. Again, the stock market has had a brutal week this week. If you take a look at this week, we are down, pretty substantially this week. So this number is supportive of maybe a little bit less aggressive Fed with that unemployment rate ticking up a little bit. But other than that, I don't think it does a thing in equities. I think the dollar maybe weakens a tiny bit, but not all that much. So glad we sat this one out. If you guys have any questions, let me know. If not, like I said, sometimes you get fireworks, sometimes you get duds. This one is looking more and more like a dud here. at least in currencies. I think in equities, I think it actually leads to a nice little rally in equities. Futures are already up about 0.75%. We had a really nice bounce here. Let me pull this up because I want everyone to see that we bounced. We had a nice doji candle here. Let me just switch over to SPX. Or a nice hammer candle here yesterday. We should trade up to this 20 or this 50 period moving average, where we are going to be tested again at this probably 4,000. So I would not be at all surprised at all. Well, we're already pretty much at the 4,000 here on the futures. So right here, I think we're going to have a little bit of difficulty, but this is a number that should support a bounce here in this in equities. Currencies, I think this is a dud of a report. I think you pack it up for the day, and we come back next week and grab some more pips. This was a really good trading week this week. Everything kind of fell in place very nicely. All right, thanks for joining, everyone. That's all I've got. Everyone take care, have a great weekend, and we'll see y'all later. Goodbye, everybody.